Okay, previously when we discussed about the types of contracts, yeah, Islamic financial transactions or Islamic financial contracts or Islamic financial instruments, yeah, we highlighted that there are several groups of financial transaction within the Islamic perspective, yeah. There are transactions that are investment in nature, yeah. Okay, first there are transactions which are for the profit seeking. There are transactions which are for not profit seeking. Yeah. So for profit seeking, it could be investment based transaction, buy and sell transactions, or other types of transactions. Yeah. So today we'll be starting on looking into each Islamic financial transaction, starting from the investment types of transaction, yeah, which is first Mudharabah, yeah. So the investing type of Islamic financial transaction are like Mudharabah and Musyarakah. Yeah? Okay, so Mudharabah, looking from the language, the root of the language of Mudharabah, it comes from the word Ad-Darbi fil Ard, yeah? Which means walking on the earth. Yeah? So, but the understanding of Mudharabah is basically when a transaction between two parties, yeah, whereby one party is providing the capital to the other party, who acts as a manager of the investment fund that was given by the first party, yeah, and the profit is shared based on the agreement between the two parties. But the financial loss is only borne by the capital provider, which is the first party. Yeah. So one party with the capital or the fund, one party acts as a manager of the fund. Yeah. The first party who contribute the fund is called as Sahibul Mal, yeah? Whereby the manager is called as Mudharib. Yeah? Sahibul Mal, or another term is Rabbul Mal. Yeah? Manager we call as Mudharib. Yeah? When there is a profit, is this shared between both parties as agreed on the contract date? Yeah? It must be agreed. Yeah? What kind of rate that they agree to share the profit. Yeah? But if there is a loss incurred, whereby the manager is not responsible, means it's beyond their responsibility, yeah? It's not due to the negligence, bukan karena kesalahan si manager, ya. That kind of loss is supposed to be the responsibility of the sahibul mal, yeah, or the capital provider. Okay. Do you think it's fair to have such stipulation whereby the loss, financial loss, is only the responsibility of the capital provider? What is the wisdom that Mudharabah is designed in such a way? Anyone maybe has the idea? Adil nggak kayak gitu? Do you think it's fair? When there is a loss, it's only the capital provider is responsible for the loss. Yeah, the manager is not supposed to be sharing the loss. Do you think it's fair? Anyone? Ramatuli Bari, you just join us. Hello, Rama. Dara, what do you think, Dara? We mentioned that Islam is supposed to create the justice among the society, right? The objective of Sharia is to achieve the justice, to create the welfare for the people in the world and in the hereafter. But when we understand the definition of Mudharabah, the mechanism of Mudharabah, it says that financial loss is not shared by both parties involved in the transaction. Is it fair? What do you think, Dara? Adil nggak?
It's between two parties.
Yes. So one party gives the money, another party works on that money. Means they will manage the money. And when there is a profit, they will share it, based on agreement. But if there is a loss, it will not be shared. But it's only will be the responsibility of the fund owner, or the investor. What do you think, Dara? Is it fair?
I think it's not it's fair.
You think is what?
Oh, I think it's both party have should have responsible, and also the but
Both parties are responsible.
So if they both get profit, they both will get say profit or loss.
They should share.
Not only one party.
So you think it's not fair then? It's not supposed to be that way.
Sorry, Miss?
So you think they should share both profit and loss? What do you think, Abi or Sasha? Come on, think. What do you think, Abi? Do you think it's fair if the loss is only, it's not shared, the loss is not shared, it's only profit is shared?
I think, Miss, in my opinion, it's depend on what agreement or what contract that agreed by all of the parties in that agreement. I mean, if they agree to just share the profit and the loss just how to say, just in the one parties, not all parties, I think it's depend back to what agreement that they have agreed in the first time, Miss. I think like that, Miss.
But this is the rule. This is the Islamic stipulation, that the loss cannot be shared. That is not supposed to be discussed. It is the rule from Islam that financial loss is not shared. Only the responsibility of the capital provider. So you don't find this product in conventional financial transactions. So Abi said that depends on agreement. But this is not part of agreement, but it's supposed to be practiced in that way for Mudharabah. What I want you to think, why Islam makes such a rule? Where is the fairness there? Where is the justice then? Sasha, you want to opine? Give your opinion?
What, Miss? Can you repeat the question?
Okay, for Mudharabah, the rule is profit is to be shared by the parties involved, right? The investor and the manager. Yeah. But the loss is not shared. Yeah. The loss is only responsible by the investor or the fund owner or the capital owner, capital provider. So let me repeat the understanding of Mudharabah. One person or one entity invests their fund into another person. That another person doesn't have any fund, yeah, but they will manage the fund that is given by the first party. Yeah? And if there is a profit, they would share based on their agreement. But if there is a loss, then the investor or the capital provider, the first party just now, will be responsible. Okay. Sorry, my signal on campus. Okay, anyone wants to give the opinion? Apakah adil kalau kerugian itu tidak dibagi? Ya, hanya satu pihak yang menanggung kerugian. Anyone?
Miss,
Yes. Yes,
in
sir.
my opinion, it's not fair because sometimes the fund is managed by the bank, for example, right? So maybe the loss is exists because there are mistake. There are mistake management in
The bank.
how to say, uh,
The investment management. Yeah.
this. So yeah.
So Arum thinks it's not fair because if it is the mistake of the manager, then that loss is supposed to be responsibility of the manager. That's why I said just now, the financial loss beyond the responsibility of manager means the manager has performed well, they have tried very well, but still incur financial loss. Yeah, in that situation, financial loss is only be borne by the capital provider. But if the loss is due to the manager, let's say manager is manipulating the fund, yeah, or is negligent, ya, lalai dalam mengurus dana tersebut, then yes, that loss is supposed to be the responsibility of the manager. But what I mean, if the loss is not due to the manager's mistake, yeah, then that kind of loss is supposed to be responsibility only by the capital provider. Okay. Why? How is it fair in that kind of situation? Yeah. It is fair actually because actually both parties bear the loss. Yeah. The manager bears the loss, the capital provider bear the loss, but different kind of loss that they bear. Yeah. The capital provider bears the financial loss. Yeah. But the manager bears the effort loss. Yeah, they have put the effort, they have put their time, but they don't get anything from that effort. Yeah, so actually it's fair. Yeah, kedua-duanya sebenarnya menanggung kerugian. Yeah, we discuss this within the context that the loss is not due to the mistake of manager. Yeah, so in that kind of situation. Islam makes sure that la yukallifullaha nafsan illa wusaha, right? because no one is burdened with something that is beyond our capability, right? The manager is assumed that he doesn't have any fund, right? He just worked for that fund. He managed the fund. He spent his time, he spent his energy, his effort, yeah? So he cannot be further demanded to pay certain amount of money when he already lost his energy, his time and everything for the purpose of managing the fund. Yeah? Whereby the capital provider, he just gives the fund, right? He doesn't get involved in the management of the fund. That's why he is responsible for the financial loss. Okay, sorry again. Now I use my phone's line, okay? Okay, so do you get the idea why the financial loss is only the responsibility of capital provider? So this is the wisdom of Mudharabah contract, yeah? The wisdom of Mudharabah contract, because some people have fund, some people do not have fund, but they have the capability, they have the skill to manage the fund, yeah? So there is a mutual relationship between the parties, yeah? So one person is helping with the fund, meanwhile another person is helping by his skills, yeah? So there is a mutual relationship, helping each other, yeah? And working in the real activities, real economic activities, yeah? That is the ideal format of Mudharabah contract, yeah? But the Mudharabah that you see implemented in the Islamic Bank, because the Islamic Bank are regulated by the government, so the government in most of the countries that Islamic banks are operating, they don't allow for the financial loss to be borne by the capital provider only. Yeah. So this part, yeah, financial loss is solely borne by the capital provider, is not yet practiced in the Islamic financial institutions. Yeah. Because the government ensure that any fund invested into the bank, it has to be returned back. Yeah? So there is no such thing that if we invest, yeah, in the term of Mudharabah to the Islamic bank, then if there is a loss, then we lost our money. Yeah? The bank will still be responsible to return our money. Yeah? Because we have LPS, the Lembaga Penjamin Simpanan. Yeah? So we have that kind of assurance from the government that people's funds are to make sure to be returned. Yeah? So this part is not practiced yet, yeah? As part of Mudharabah. Yeah? But the profit sharing, yes, based on agreement, is already being practiced. Yeah? Okay. So for Mudharabah, it's not correct when we say profit and loss sharing. Yeah. But it is a profit sharing agreement. Yeah. It's not a profit and loss sharing. Yeah. Supposedly. Yeah. But in the real practice for now, the loss is not yet only the responsibility of the capital provider. Yeah. Okay, we'll discuss about the implementation of Mudharabah in Islamic banks later on. Now we just go through the understanding of Mudharabah. Yeah? I hope you are getting the idea of what is Mudharabah and how it is operationalized. Yeah. Okay, so the Sahibul Mal or the fund provider or capital provider, he or she does not have any right to interfere, yeah, in the business affairs. Yeah? So when they give the fund, it will be the exclusive responsibility of the manager of the fund for the management of the business activities. Yeah. So the fund supplier is not like what do you call? They cannot have any role in the management of the fund. Yeah? They just entrust their money to the manager. Okay. Any questions so far for the basic understanding of Mudharabah? No, we move. Okay. There are basically three types of Mudharabah. First, we call it as restricted Mudharabah, or in the Islamic banks, you will identify restricted investment account. Yeah, that refers to restricted Mudharabah. Yeah, or in Arabic, we call it Mudharabah Muqayyadah. Yeah? Restricted Mudharabah is basically the Mudharabah with certain terms being stipulated by the capital provider. Yeah? So capital provider restrict certain terms in the contract. Yeah? For example, the capital provider may give the term or condition, let's say, my fund cannot be managed outside Indonesia, let's say, in terms of location. Yeah? So that is a restricted terms already. Yeah? Or you cannot operate my fund in certain business industry. Yeah? Only in this industry you can manage my fund. Yeah? So that one is restricted Mudharabah. Yeah? So certain conditions are put into the contracts by the capital providers. Okay? Understand on Mudharabah Muqayyadah? Muqayyadah is terikat, restricted. Okay, oppositely, the second type of Mudharabah is unrestricted Mudharabah or Mudharabah Mutlaq. When we say Mutlaq, what does it mean in our own language? Is absolute, right? So unrestricted Mudharabah or Mudharabah Mutlaqah, the capital providers give an absolute rights to the managers to manage the fund in whatever ways that is not violating the Islamic principles. Yeah? So there is no any syarat or condition being put. Yeah? The manager is given freedom to manage the fund. Yeah? In the Islamic bank, this product you can identify as unrestricted investment account. Yeah? Okay, the third type, if you have any question, just stop me. The third type is Mudharabah Mushtarakah. Yeah? This is the combination of Mudharabah and Musyarakah. Okay, so this is like a hybrid product. Yeah? So there is a Mudharabah, there is also a Musyarakah here. Yeah? So in the beginning, the contract is purely Mudharabah. One person gives the fund to another person who will manage the fund. Yeah? Later on, after some times, the manager is indicating that he also wants to contribute some fund to the contract. Yeah? So later on, both parties actually are sharing in terms of fund investment, yeah, into the business contract. In the beginning, it was purely one person only who contribute the fund, but later on, the manager also contribute the fund. Yeah, so that's why we call it as Mudharabah Mushtarakah. Yeah, it combines the Musyarakah into the Mudharabah. Okay, any question?
No, miss.
No. Okay, we move. Okay, now let's discuss about Sharia stipulations for Mudharabah. Yeah? First, the pillars, yeah, rukun, yeah, the rukun of the akad, yeah. So the pillars, basically, there must be the two parties exist, yeah. When I say parties, it doesn't mean only one person, yeah. The Rabbul Mal may be the combination of several persons, yeah, or combination of several entities, yeah. And Mudharib, it could be a person, it could be an entity, yeah. It could be more than one entity, yeah. It depends on the nature of the business project, yeah. And second, in Mudharabah, it has to exist the Mudharabah object, yeah, which is the capital and the work, yeah. The capital by the Rabbul Mal and the work by the manager itself, yeah. The third is ijab kabul, yeah. I believe you are very much aware of ijab kabul. It's basically the pronouncement of acceptance and offer of the contract, yeah. So both parties are giving the consent to get involved into the contracts, okay. It is not necessarily pronounced verbally, yeah. It can be pronounced by written, yeah. What about the person who cannot speak, yeah? Yeah, the person who cannot speak, then they cannot use the pronouncement by oral, yeah. So they would use other method to indicate the ijab and kabul, yeah. In our traditional market, sometimes I think if you ever meet, the seller will say barang kedron, pengkelon, ya, barang untuk anda, duit untuk saya, ya, just to indicate that both parties are already satisfied with the transaction, ya. That's why there is a necessity for ijab kabul, ya. Otherwise, there may be sometimes that one party is not satisfied with the contract and the agreement, yeah. So there must a need for a pronouncement of the ijab and the kabul, yeah. So both parties are basically consent and agreed towards the contract, yeah. And also the profit sharing ratio, yeah. What kind of ratio that is being agreed by the parties involved in Mudharabah, yeah. 30%, 70%, it could be said in terms of percentage or absolute nominal, yeah, 1-to-1 or 2-to-1, yeah. It depends on the agreement between the parties, okay. Okay, now let's talk about certain issues within the pillars of Mudharabah contract, especially about the capital, yeah. Okay, principally the capital of Mudharabah should be in the form of cash, yeah. But it also can be in the form of any kind, yeah. Let's say the assets, yeah. It could be in the form of assets, yeah. The value of the asset has to be agreed, yeah, by mutual consent between the parties involved in the contract, yeah. So that value of the asset, let's say if the asset is being contributed instead of cash, then will become the Mudharabah capital, yeah? In terms of accounting, we record the monetary amount of that asset, yeah? What is the value of the asset, yeah? And the capital has to be clearly known to the parties, yeah, in terms of quality and quantity. If it is in the form of asset, yeah. If it is in the form of cash, then there is no an issue. We just need to make sure that the amount is clear. Yeah, what is the amount of cash being contributed? Yeah? Why the capital should be clearly known? Because we want to avoid the gharar. Remember gharar? The uncertainty in the contracts. Yeah. So basically, if we are able to practice the whole details of Islamic financial transactions, every detail of it has its own wisdom, yeah, to make sure that the objective of Maqasid al-Syariah is being achieved, yeah. Why the Rabbul Mal and Mudharib, yeah, the parties that are involved, there are certain criteria that are stipulated for the parties involved. Let's say children below the age cannot join the contract, yeah, because they do, Islam doesn't want that the injustice occurred to the parties involved. Yeah? That's why the parties involved also must have certain criteria. Yeah? Among others there must be baligh, there must be well literate in terms of legal, financial. Yeah. So because Islam wants to make sure that no parties is being what do you call terdalimi, yeah, what do you call in English, no party is being cheated, yeah, tertipu, yeah, in the transaction, yeah. That's why they stipulate every details on the contract, yeah. And another important thing is for the capital of Mudharabah, it cannot be in the form of debt or receivable. Why? Any idea why debt is not allowed to be the capital of Mudharabah? Or piutang receivable? We mentioned in the beginning that the wisdom of Mudharabah is we want to combine between someone who has the fund and someone who has the skill to jointly work together, not work but cooperate, yeah, to jointly cooperate and gets the mutual benefit out of that cooperation, yeah. So imagine if the capital is the debt, can the manager work on the business? No, right? They cannot work on the business, so that's why the debt is not allowed to be the capital of Mudharabah, yeah? Because it will not be function, yeah? It's not beneficial for the manager of the fund, yeah? Because he has to collect the debt again, and also it's not certain that the debt can be collected, yeah? So there is a gharar element there, yeah? There could be a possibility of cheating there, yeah? Manipulation, yeah? If the capital is in the form of the debt, yeah? That's why it's not allowed. Any question? No? Okay. Now we talk about profit distribution, yeah? Another pillar of Mudharabah contract, yeah? So in the contract, the contracting parties must be agreed on the profit sharing ratio, yeah? It must be specific, yeah? Specific, and it must be of the profit expected to be earned by the venture, yeah? So let's say party A and party B agreed 30%, 70% of the profit to be earned will be distributed, yeah? Or 1, 2, 3 just now, yeah? One person gets one portion of 4, yeah? Another person got, let's say 3 portion of the 4 of any profit that will be gained, yeah? So how is it different from the conventional perspective, like fixed deposit? Yeah? Are you familiar with fixed deposit at the bank? Are you familiar? Fixed deposit, deposito pada bank konvensional? Familiar?
Yes.
Do you have any deposito at the bank? Not yet. Okay.
No.
So they will give you specific percentage of return. Yeah. So they will mention to you, let's say 3.5% per year return of your investment, yeah, of your fixed deposit. Yeah. So there is a fixed amount already of how much you will receive out of that fixed deposit. Yeah. Meanwhile, from the Islamic perspective, we cannot promise the total amount to be returned. Yeah, but it will be a percentage. Yeah, if there is a profit, then certain percentage will be shared. Yeah, so that's why in Islamic Bank there is a 30% versus 70%. Let's say 70% for the bank, 30% for the customers. Yeah, so they don't give the exact amount of return. Yeah, but it's based is varied. Varied. Bervariasi tergantung kepada keuntungan yang diperolehi. Ya. Okay, so by saying that, that's why an unknown ratio is not allowed. Yeah, let's say the parties just say we will decide later on. Yeah, if we get profit, that is not allowed. Yeah, we have to agree on the ratio from the beginning. Yeah, okay. And then a ratio attributed to future settlement, like I said just now, we will agree later on, depends on the future settlement. And then a ratio linked with the capital. Yeah, let's say certain percent of the capital. That one cannot be allowed in Mudharabah. Yeah, because why? If it is agreed on the capital, the first thing is the capital provider is only one person. Yeah? Another person doesn't have capital, right? And if the percentage is based on capital, then it will be a fixed amount to be distributed. Yeah. Let's say the capital provider gives 10 million and it is agreed that 10% of 10 million will be shared, will be given to the capital provider. Yeah. Let's say if the profit is very small, yeah, then how the manager will provide the return, the fixed return just now to the capital provider. So it will be very mendalimi, yeah? It will be very injustice for the manager in that case. Yeah? That's why a ratio based on the capital cannot be allowed, yeah? Because it will give a fixed amount to be returned. Meanwhile, the profit will be fluctuating. Yeah? It will be varied across the period. Yeah? Or a lump sum settlement as profit also cannot be allowed. Yeah? Means a total amount, yeah, a lump sum. Let's say we agreed that we will share 5 million and 3 million. Yeah, a lump sum amount. Yeah, that one cannot be done in Mudharabah. Again, like I mentioned, the profit, we cannot be sure how much the profit. Yeah? How come we agree on certain fixed amount of sharing of profit? Yeah? Okay. Furthermore, as I've been discussing just now, the losses in Mudharabah that is not due to the mistake of the manager shall only be borne by the capital provider. Yeah? So how it is fair, like I mentioned to you, the manager also suffer the loss. But in terms of not receiving anything as profit, meanwhile he has put his work and time and energy towards the business management. Yeah? When the case of the loss is due to the negligence or intention, yeah, or intentional misconduct by the manager, then the mudarib or the manager will have to bear the loss. Yeah, in that case. Yeah. So it's actually the justice is already in all the mechanism of this Mudharabah. Yeah. Okay, any questions so far? No? Pardon me. Okay, there are certain other issues with regard to profit sharing mechanism. Okay. Profit sharing, there is an issue whether the profit sharing is based on a gross profit or based on a net profit. Yeah, so it must be agreed between the parties whether they want to share the profit based on gross profit or based on the net profit. Yeah? And there is also a calculation issue for Mudharabah Mushtarakah. Yeah? How do we allocate the profit? Now, when we talk about Mudharabah Mushtarakah, there is a loss sharing because why? Both parties already contribute the capital. Yeah? It's no longer one person only become the manager, another person become the fund contributor. Yeah? But all the parties involved in Mudharabah Mushtarakah, basically they contribute the capital. That's why there is a profit and loss sharing, yeah, for Mudharabah Mushtarakah. Yeah. So there are three ways, mechanisms for profit and loss sharing of Mudharabah Mushtarakah. The initial profit will be calculated, will be shared based on agreed ratio. Then there is a balance after deducting Mudharib portion will be distributed on capital contribution. Yeah? I will share with you the calculation, the details of the calculation. It's not in the slide, unfortunately. Yeah. Or another way, initial profit sharing calculation based on capital contribution. Then the balance after deducting Mudharib portion is distributed based on profit sharing ratio. Yeah. Okay, again, loss is shared based on capital contribution. Why? The same principle like just now, financial loss is only borne by the capital provider. So when there is a financial loss, it will be shared based on the capital portion. Yeah. So whoever has a higher amount of capital will bear a higher amount of loss. Yeah, as we discussed just now. Yeah. Okay, when the Mudharabah is considered to be ended, yeah, or terminated, yeah, if any of the condition as presented here happens, yeah, or occurs, let's say it has reached the end of the period of the contract. Let's say contract is agreed for 1 year, then the end of the period of the contract is considered that Mudharabah has been terminated. Yeah? Or one of the parties withdraw from the contract, yeah, or one of the parties pass away, yeah, or if there is any party breach the contract, yeah, misconduct by the manager, yeah, or the fund contributor, the capital provider is not able to provide the capital, then the contract is considered to be ended or terminated. Yeah? Or when there has been loss from time to time, there is no more capital. Yeah? So it is considered to be the end of Mudharabah contract. Yeah? Okay. How Mudharabah is implemented in the Islamic banking system. Yeah? Mudharabah is mostly used as investment product, yeah, for deposit, like fixed deposit, but there is no a promise a percentage of return, yeah, but it is profit sharing ratio. Yeah. So the parallel product of fixed deposit in Islamic bank, it is called as Mudharabah General Investment Account. Yeah? If it is general investment accounts, means unrestricted investment account. Yeah? So general is the same as unrestricted investment account. Yeah? For the large society, I mean for the commoners like us, for the common people, we only can have access to unrestricted investment account, yeah, or general investment account. Yeah. Restricted investment account or Mudharabah Muqayyada, as we discussed previously, is normally being given to the large investors. Yeah? Because how come we want to put a very small amount of money and we put the terms on that? Yeah? So that's why we normally we don't get access to the restricted investment account. Yeah? So mostly it's for large enterprise financing, yeah, project finance, business ventures, yeah, or other types of financing that is involved by the Islamic bank with the big investors, yeah, like companies, yeah, etc. Yeah. But for the people, mostly it is general investment account, yeah, which is similar to fixed deposit, but profit sharing is different. Yeah. So if it is general investment account, we put the money into the bank. Yeah. So we are the Rabbul Mal, we are the capital provider. Yeah. The bank becomes the manager or Mudharib. Yeah. And then the bank will invest further. Yeah. So the bank is the intermediary. Yeah. I think I mentioned to you in discussing Islamic financial system. The bank is the financial intermediary. Yeah. It's like they are the agent. Yeah. They get the fund from us, the surplus fund, and they would invest into the deficit fund units. Yeah. Into other entities or individuals. Yeah. So banks are involved with two parallel transactions. Yeah? Bank is having transaction with us as a Mudharib, but then they become the capital provider to other parties. Can you understand? Can you get me? Okay. So they are the middle person. Yeah. They get the fund from us and then they would invest again into another person or entity. Yeah. And then they will that another entity will share the profit with the bank, and the bank will share the profit with us. Yeah. And remember, there is no loss sharing. Yeah. Because the government is regulating that the people are not supposed to bear the loss. Yeah. So the banks normally they reserve. Yeah. They don't distribute the whole profit. Yeah. They would keep certain reserve normally to anticipate if there is any loss in the future, that they will still be able to share the profit to the customers. Yeah. So previously we have like profit reserve, yeah, in the bank's account. Yeah. They want to anticipate any future losses. Yeah. Okay, so the customers who invest the money into Mudharabah product in the bank are basically called as depositors. Yeah. So this is the scheme of Mudharabah transaction between the depositors like us, yeah, with the Islamic bank. Yeah. So we deposit or we invest the money into the Islamic bank. Yeah. Actually, there is another party. Islamic bank will engage with another party. Yeah, there is a third party, and then they get the profit from that third party, and they will distribute again the profit with us as depositors. Yeah. Okay, now we enter into the accounting treatment, accounting issues. Yeah. So basically, there are two parties involved in Mudharabah, the capital provider and the Mudharib. Yeah. And then we can consider the business entity that is being managed by the Mudharib. Yeah. But for the purpose of simplicity, we just regard that the record of Mudharib is the same like the record for the business entity that he managed. Yeah. Okay. So the transactions normally involve, yeah. This is based on Indonesian accounting standard, Sharia accounting standard. Yeah. So on the beginning of the contract, when the capital provider give the fund to the manager, I'm sorry if it is not full display, but I want you to focus on the journal entries, yeah, not the amount. Yeah. So when the capital provider give the fund, the capital provider's book of record, he or she would record as debit Mudharabah investment and credit cash. Yeah. Later on, we'll see if it is in terms of asset. Yeah. If the capital is given not in the form of cash. Yeah. In the book of Mudharib, or the investment, the business unit that he managed, yeah, he or she would record, because they receive cash, so they would record debit, cash, and credit temporary shirkah funds. Yeah, we call it. Yeah, we cannot call this as a liability. We cannot call this as an equity. Why? If it is in a normal or conventional transaction, we would credit liability, right? Here, or equity if it is from the owner of the business entity. Why in this Mudharabah context we cannot credit liability or equity? Any idea? Jasha, any idea? Why we don't credit liability or equity? Jasha Belfa,
Yes, Miss.
what do you think? Why we don't credit liability or equity here? When we receive the fund from the capital owner. In a conventional transaction, we will credit liability, right? Or equity, right? If it is from the owner. But here, in Islamic accounting, we create one account named as temporary shirkah funds, yeah? Or dana shirkah temporer. Yeah? By the way, is it liability or not? The capital given by the capital provider, the Rabbul Mal or Sahibul Mal. Is it a liability? Do you think it's a liability? Jasha?
I think no, Miss.
It's not a liability. Why it is not a liability? Why? Does the manager or Mudharib borrows the money from the capital provider? Did he borrow?
No, Miss. I think no.
No, right?
Yeah.
He doesn't borrow the money, right? This is a joint venture, right? This is like a partnership, right? Okay, is it equity? No, we identify that it is not a liability, right? Is it equity?
I think no, because this is not his money.
This is not
Eh, eh, eh.
his money. Because the ownership of the joint venture does not only belong to the Sahibul Mal, right? They don't purchase the shares in this joint venture, right? They are combining the fund and the work, yeah? So both parties are actually having equal ownership towards the project, yeah? So this is what I mentioned, the uniqueness of Islamic financial transaction. Yeah. So Mudharabah is unique. Yeah. It cannot be found an exactly similar product or contract in conventional financial transaction. Yeah. This is unique because this is not a liability. This is also not an equity. Because if there is a loss, if it is liability, then we have to return the money, right? But we say that Mudharabah, if there is a loss, then the loss is supposed to be responsibility of the capital provider. Then we are not responsible as a Mudharib. We are not responsible to return the money if there is a loss, right? And that's why in the beginning of establishment of Mudharabah transaction, yeah, people are confused, the accounting scholars, the Islamic accounting scholars, where to put this item, because we don't have specific what category in the statement of financial position. We cannot include that in liability. We cannot include that in equity, right? So they put in between. They put in between liability and equity. Some put on the bottom, of balance sheet item, we call it. Of balance sheet item. Berarti di bawah balance sheet, because they are not part of liability as well as not part of the equity. Okay, continue with the journal entries. So you understand why we credit into temporary shirkah funds, and not liability and equity. Okay, let's say if the business get the profit, get the income, and incur the expenses. So the record is only on the book of the business unit or the Mudharib. Sahibul Mal doesn't need to record anything. Remember, Sahibul Mal cannot interfere in the management of the fund. So the journal entries here is normal. Receive. Yes. Who's that? Nama Tuli. So the journal entries is usual, like you did previously. If you receive the income, then we debit cash or receivable, credit revenue, right? It's the same. It's the same. Okay. If it is expenses, debit expenses, credit cash or account payable. And then we will identify how much of the profit. So we debit the revenue because we want to close the revenue account, and we credit expenses account. We want to close the expenses. And the difference is the profit is supposed to be the distributable profit. Means the amount of profit to be distributed between the parties. Okay. And when the profit is being distributed or shared between the parties, we need to calculate based on the agreed profit sharing ratio. Let's say in this example, the Mudharib ratio is 3/4. Meanwhile, the capital provider is 1/4. And the profit to be shared is 2,000. So we just calculate how much is for the manager and how much is for the capital provider. Okay, let's say if the capital provider receive the profit sharing in terms of cash, then he or she will record debit cash and credit Mudharabah profit sharing. And if he does not receive cash yet, let's say at the end of the year, so it becomes the receivable. This is the same way of recording the journal entries as per conventional transactions. So we record receivables debit and revenue as credit. And later on, when they receive cash, you just debit cash and credit profit sharing receivables. Okay, in terms of the business unit itself, or in this case, we regard that as a Mudharib book of record. They will close that distributable income or the profit amount. So debit the distributable profit of 2,000 and credit cash, because they would share the cash. Okay, how it is presented on the statement of financial position. For the capital provider, because it is investment, then it becomes part of the asset for the capital provider. So it will be presented as part of asset, Mudharabah investment, how much. And then if let's say the business has occurred the loss, then there will be an amount of allowance for loss. But in this example, there is no any loss. So allowance for loss is 0. Okay. This profit sharing is just normal. We record it in the income statement, yeah, the 500 just now. Okay. The display is only for the statement of financial position or balance sheet. Okay. Okay, in the Mudharib book, yeah, it will be recorded under not really under liability, but off balance sheet item. Yeah, temporary shirkah funds how much, and allowance for losses how much. Yeah, if there is any loss being incurred. Yeah, so any loss will be reducing the total amount of Mudharabah investment. Yeah, or temporary shirkah fund. Yeah, by present.
Imran, I want to ask a question, please.
Rama, please mute, Rama.
I said I want to ask a question.
Are you following the class or not, Rama?
I'm following the class. I said I want to ask a question.
Oh, you want to ask the question. What do you want to ask?
Yeah. Okay. I think you mentioned about the liabilities. I think Mudharabah is not a liability. So according to the accounting issue, what is the recognition and liability based on the accounting issue?
Pardon?
What does it mean? What does it mean based on accounting issues?
Based on
Recognition of asset and liability.
asset and liability?
Yeah, based on the accounting issues
Oh,
on Mudharabah.
yeah.
What does it mean, the recognition of assets and liability?
Okay, if it is asset, yes, Mudharabah investment is an asset, yeah. But from the perspective of Mudharib, yeah, the fund that he received or she received, it's not exactly the liability or equity, you know, because this is joint venture. Yeah? Liability, as you understand, is a loan, right? One person borrow a loan from another person, and you agree to return that loan on a specified date. Yeah, if there is any interest, then you have to pay the interest. Yeah, but this is not the lending transaction. That's why it is not a liability. Yeah, it's not exactly a liability. Yeah, but in this illustration, they just put under the liability because later on they will return this fund. Yeah, this investment fund. Yeah, minus the losses. Yeah, if there is any loss. Yeah. But in actual definition, it doesn't really fulfill the definition of liability. Yeah? That's what I mean by temporary shirkah fund. Okay? Because liability, you have to return the full amount of liability to the creditors, right? But this Mudharabah case, there is no compulsion, it's not compulsory to return the full amount to the other entity who give us the fund. Okay, Rama?
Yes, thank you.
Okay,
I understood. Thank you.
thank you. Okay, so that was transaction based on cash, yeah? If the capital is in the form of cash, yeah? If the transaction is not in the form of cash, but in the form of asset, yeah? Means the capital provider doesn't give the cash to the manager. They give in terms of in kind, yeah, or non-cash asset, yeah. So it must be calculated the book value of the market value of the asset, yeah. And if there is any difference between the book value and the market value or the fair value, then there will be a gain, yeah, a gain recognized by the capital providers. Yeah. So we would record Mudharabah investment based on the market value of that asset. Yeah. Let's say the capital provider contributes a machine. Yeah. The machine fair value is 100,000, but the book value is 80,000. What is it book value? Is the cost minus accumulated depreciations, right? Or if it is a newly purchased asset, then the book value is the cost itself, yeah? How much you incur to buy the asset plus other costs that needs to be incurred. So there will be a deferred gain to be recognized under capital provider. Yeah? In this example, let's say 20,000. Yeah? And in the book of Mudharib or the business unit, they will record the non-cash asset debit, like you record the normal asset. Yeah? And we credit the temporary shirkah funds, yeah, 100,000. Okay. Okay, if there is a decline of the value of the asset before the business starts, yeah, then there must be a recognition of such investment to reduce the value of Mudharabah investment. Yeah. Let's say the asset previously was regarded as 100,000, but then due to many factors, the market factors, etc., then it is assumed that there is a decline of the value of 5,000. Then the capital provider need to record that as a loss, yeah, investment loss 5,000, credit Mudharabah investment 5,000, yeah, because we need to adjust the value of Mudharabah investment, yeah, and also the Mudharib or the business units, they need to reduce the amount of temporary shirkah funds, yeah, by the declining value of 5,000, yeah. Okay, deferred gain just now, the 20,000, yeah, it needs to be amortized over the period of the contract, yeah. So at the end, let's say, okay, for example, the business gained 20,000 as income, 8,000 as expenses. Then the business unit need to record that income as usual, yeah. And then the capital provider need to amortize the deferred gain, yeah. 10,000 debit deferred gain and credit gain 10,000, okay. Deferred gain means you don't yet recognize the gain, yeah. Only at the end of each the contract period, over the period only we will recognize the gain. That's why we credit the gain 10,000, yeah. And then we need to calculate the profit sharing, yeah, between the capital provider and the manager, yeah. So calculation as usual based on the profit sharing ratio. Then if capital provider, if they receive cash, then they will debit the cash, yeah, credit Mudharabah revenue, yeah? And if they don't receive cash, as what you've learned in the conventional accounting, then will debit receivable and credit the revenue or profit sharing, yeah? And later on they will debit the cash and credit the receivables, yeah? On the book of Mudharib or the manager, as usual, we need to close off the profit that's to be distributed, yeah, and credit the cash, yeah. Wait, I think this is a repetition. Okay. Oh, if it is distributed in terms of cash, then you credit the cash. But if it is distributed in the form of, it's not yet distributed, then we need to credit the payable, yeah. Sorry. Okay, basically, the entries, the journal entries for the second illustration, you follow the first one, yeah, in terms of income and expenses recording. The difference is only on the asset, yeah, because this time the asset is being contributed as a capital, and the consideration on the deferred gain, yeah, and also if there is a decline in the value. If there is no decline in the value, then there is no need to record investment loss. Yeah? And on the statement of financial position, the same recording that we need to do. Yeah, Mudharabah investment, because there is just now a debit of 5,000 investment loss, so the Mudharabah investment becomes 95,000. Yeah. In this illustration, it doesn't have any loss, but if it has a loss, let's say, instead of profit here, there is a loss, then how do we record the loss? We only record the loss on the book of capital provider. Yeah, it's not to be shared between the two parties. Yeah, so there will be allowance for losses of certain amount. Yeah? Later on, I will share you the, I think, Microsoft Word file of the full illustration of the journal entries, inshallah. Okay. Any questions so far? I know it's a bit complicated on the accounting aspect, but I will share with you the module as well as the illustrative cases, yeah, on the accounting treatment. Any question? Can we proceed on Musyarakah? What time is azan? How many slides? Hello? Can we proceed or you want to stop there at Mudharabah?
Yes, Miss.
You want